Good evening to all of you. Let me first thank the panelists for their vivid contribution to the debates. I would like also to thank all the participants for, and your attendance demonstrates further need to have such debates around infrastructure, but also that Paris is the good place to have these debates. What has been discussed today echoes really, the way we look at infrastructure in Natixis, and I would like to underline two important points that have been discussed today. First, of course, infrastructure is a huge market. It will continue to grow, especially with emerging markets. But the specific element of this asset class is about the long term. And the financing, what has been really an important change during the past years has been the fact that this long-term financing that was brought mainly by banks is now challenged by the regulation. And of course, regulation has been pushing banks to reduce their funding at a very long-term assets. And in Natixis, we have been convinced that actually a key was about cooperation between banks and non-banking financial institutions. And actually, since 2012, our development on the infrastructure market has been fully based on the cooperation between us and the non-banking financial institutions by helping non-banking financial institutions to beef up their capabilities and their know-how and their knowledge on the market, but also by bringing to our clients, the borrowers, new pockets of liquidity and sometimes innovative features that were coming from these non-banking financial institutions. And how we have done that exactly? First, we signed some strategic cooperation agreements with numbers of institutions in Belgium, in France, in Germany, but also in Korea. We have, doing so, brought this infrastructure platform more than 6 billion of institutional liquidity, 6 billion euros. At the same time, we have sponsorized since 2012 a research chair at EDEC Risk Institute that contributed to build a favorable regulatory treatment under Solvency II. Other thing we did was to, for example, create an annual full day dedicated to market trends and issues on infrastructure. It's called the Infra Day. We'll have the 5th edition in just a few days. And this year we are particularly happy that we could join it to this initiative taken by EUROPLACE and the French Ministry of Finance. And of course, it's a great development for us. So, since 2012 and what has been done during these past years really demonstrates for us that this collaboration between non-banking financial institutions and bank is very fruitful for the sector of infrastructure. And clearly, even if these past years have been seeing the reduction of banks' share in financing the infrastructure, we feel and we consider ourselves more than ever as an infra bank. The second topic is the one that has been just developed in the previous panel, it's about financing the energy transition, and clearly it's an important element of discussion in this infrastructure sector. We are very involved in this. We financed our first renewable projects 20 years ago, and I think we are today recognized as an important player in this field. But green financing, as it has been recalled today, is not limited, of course, to renewable energy financing. And there are a lot of other topics like mobility, like green and soberer buildings, smart grids or energy storage projects, but also all energy efficiency and decarbonization efforts or land use and sustainable forestry investments. Of course, the financial industry is a key player of this transition as a provider of capital, but also innovation. There have been a lot of innovation these past years and months. And a quite convincing example of this is the green bond market, which globally rose to an impressive $278 billion outstanding from only $38 billion at the end of 2014. What we think today is that for us as a bank, it's very important to have a product neutral approach towards this evolution of the financing tools to fund the energy transition. It can take a lot of forms, of course, green bonds, of course, the financing of renewable energy, but also some securitization products. We issued, for example, the first CMBS, green CMBS on the US market, and it's just an example of the potential on this field. Green loans and so on. So there's a real development of innovations that are emerging from this green transition. And at Natixis level, we have decided to create a green and sustainable hub that is completely product agnostic, and that is really devoted to this type of innovations, working with all our business lines. So these are the 2 points I wanted to highlight, and I'm very happy to leave the floor to Alain Rocher for Quentin.
Thank you, Frédéric. I will try to be brief because I know it's been a pretty long day for all of us and for all of you. I'm very pleased to announce that Quentin has sponsored actually the creation of an infrastructure chair with HEC. We just signed an agreement, our agreement this morning with the school. So I would just like to take use of this time to make a few remarks. First one is, what is the background of this decision? Secondly, why pick HEC to do this job? And thirdly, what will be the pedagogical content of this partnership? The background of sponsoring a chair stems from the fact that on one side we enjoy a very, very rich and interesting ecosystem in France in particular, with plenty of large corporates, large financing banks like Natixis, many investors who are very, I would say, knowledgeable about the asset class. And yet, when we put the team together, we found that we could attract some people with very good private equity background, but no particular knowledge of the intricacies of infrastructure investing. We could attract some people who had invested in some regulated assets, but who did not have all the skills required to create some value on the assets. And therefore, we came to this very simple realization that we need to take action to improve the knowledge about the specificities of our asset class. We also realized that as the asset class was growing. Gérard Bestralet mentioned that last year we reached 33 billion euros of assets under management just in France, 100 billion about in Europe, and about 250 billion euros globally. There is a number of issues which are going to shape the future of our lives as citizens and as corporate entities. Mobility, I think talking today about transportation, I think is passé. Clearly, tomorrow we shall have to invent new ways of thinking mobility for people, for goods. Climate transition, of course, is something absolutely evident, which poses extremely complex issues, because as we grow renewable energy, we also increase the level of complexity required to provide some stable and reliable source of energy at any time during the day. Climate, evidently, is also going to be a big theme, climate transition. And as citizen, of course, it's something which will be very, very important going forward. So we think that not only do we need to improve the overall knowledge of professionals in our sector, but also to participate to increasing the level of knowledge among, I would say, the citizens, whichever country actually be there. And I think it's a big, big challenge, because we found that many public policies on infrastructure actually are very poor, just because there is no proper, I would say, thinking, no training for key decision makers, be them in the private sector or the public sector. So that prompted us to take action. Now, why did we pick HEC? I would say for two main reasons. The first one is we wanted to invest in an academic program in a university or a school which is a school of excellence. So for us, excellence was extremely important. We didn't want to have something cheap. We wanted to have something very material to be sure that, you know, our investment, because it's an investment in this program, would impact on future decision makers. The second obvious reason is that more than half of the students at HEC are non-French. And they come from very different countries, be it other European countries, America, Africa, and Asia. So we thought that, you know, it was also a way for us to spread, I would say, the good news, so to speak, of infrastructure, and be sure that, you know, we had some proper relay in various opinions. So that's really were the two main reasons behind that. The third one, of course, was the quality of the academic team. As you know, HEC ranks among the best business schools in Europe and in the world. And for us, working with Professor Grommer, who is an excellent academic, was extremely important in that selection. Now, the last point is the content of the training. We gave a lot of thought to that with HEC academics, and we decided to make it very pragmatic. So we have decided to work on creating some case studies, focused on some very particular and very, I would say, data-driven cases. We have decided to share actually some data on a deal, which, as you may understand, is quite rare in our industry, where people are very secretive. But we thought that, you know, as long as there was no secret to betray, we thought it was very interesting. And we also thought that it would make a very lively training for pupils, for the students. We also decided to not only create a case study, but to commit when at the end of the session where students have studied the case study and presented their conclusions, that, you know, some people from Antin would come and say, okay, we've listened to what you guys said, now this is what happened in the real life. As a student, I dreamt of moving from a concept to real life, and I think we'll try to do that. So that's in a nutshell what I wanted to say. We are very proud to have achieved this this program, this sponsorship of a chair. It's part for us as a wider program. We also have developed a similar program, but focused more on academics with the University of Bocconi, which is Italy's largest university. And we're about to implement another program at Cornell University in America. But we are very thrilled to do that with HEC. Thank you.
Thank you very much. Presentation of new concrete initiatives like Natexis with François. Now, Mr. Prime Minister Lionel, we have discussed in the sessions the needs in Africa, in South countries, and Bruno Bensasson from NG said that the needs were huge, and that we are just at the start of the way to satisfy all these needs in terms of energy equipment, electricity, and all these questions of infrastructure. You have been Prime Minister in the Benin. Concretely, how do you see the next steps for Africa and southern countries confronted concretely to these questions of infrastructure financing?
First, thank you very much, Arnaud, for having me, and good evening, ladies and gentlemen. I was especially pleased because before being Prime Minister for a short while, I had the opportunity to work in the investment world as an advisor to private equity funds, and then as the CEO of a private equity firm. So I spent 20 years in this capacity, and only 10 months as Prime Minister. So you see, for me, it's a good ratio. I think it's a good ratio.
I understand, Mr. CEO.
You see that some French Prime Ministers do the reverse way, but I think it's very healthy. Okay. Now, I wanted to say that what Mr. Bensasson has underlined is very, very important. We in Africa have immense needs. First, because we have shortages in terms of mobility, in terms of connectivity, in terms of social infrastructures, in terms of access to water, absolutely key, vital, in terms of access to energy, with 70% of the population deprived of light, which is one of the essential elements of a modern life. But more importantly, if you foresee our future, we have to sort of educate, take care, and move, and another billion of our fellow citizens in 30 years. We have to create for them an urban environment, because we will add a sort of one Europe to Africa in African cities. The prospect is, in less than 30 years, to have another 500 million urban citizens. So the needs of today are immense, but the constraints of tomorrow, in terms of infrastructures, are just exceptional. I'm not sure I found in the panel on Africa an immense optimism. I would like to say that I'm a bit more optimistic than the tone, the current tone. First, I'm absolutely of your view that the cooperation of players and the DFIs cooperating with the private financial and the banking financial centers of the planet and the asset managers, that all is far more efficient today. You say that very eloquently. I think it is a major shift. The fact that MIGA, in terms of guarantees, like the bilateral agencies, like AFD, the fact that the IFC is more and more efficient in support of the private sector and able to syndicate other partners in equity and debt. All that is a major, major shift. In 2015, in a UN conference in Addis Ababa, the principle of supporting the private sector through the DFI's balance sheet has been agreed by the international community. I think it's an important progress because they were, in the recent past, very much alone, not syndicating with the private financial sector, the banking, private or not private, but banking financial institutions. This is a major, major change, a step change. So this is a factor of optimism. The second thing, I think the rule of law in Africa is making progress. Quite spectacular. I would say we have made, in terms of rule of law, more in 5 years than in 50 years before. We have a little problem, maybe. Our courts in Africa are maybe a bit less reliable than our texts and our laws, our regulations. This is a problem, but the arbitrage courts are very much more important today than in the past. So even in terms of rule of law, I think we have made a few important steps. Having said that, I think that the problems are the public authorities. Because if I've learned something from the private equity, is that you absolutely need, for long-term investment, an alignment of interests of all stakeholders. I think, and it has been also underlined, speaking of the various sectors where you have B2C business models, that it's easier to finance. Take the telecom. We have gone through a telecom revolution, which has, on the digital economy in Africa, immense and very, very positive effects. Life is better, productivity is better. It's a major change. This has been financed. And you have a component of infrastructure, which is very important in telecom. This had a business model with abundant free cash flow in the telecom operators, so that you have self-financed the infrastructure, major transformation of Africa. When you have to finance a power plant in Africa, if you sell to a state-owned electricity operator, you really need, and you start to get, but you really need a good guarantee scheme. Because all our operators, in 80% of the cases, are in jeopardy and bankruptcy, which doesn't help for the credibility of their signature to buy what you can have to deliver in terms of energy. So you need the new guarantee schemes, which are now in place. Nevertheless, you have a problem if your counterpart is a public body. It's very different if you make a power plant for a cement factory, for anything which is a reliable client for the long term. And when you consider the mini-grids, you have the final consumer, which is your real counterpart. So it's easier to finance. So the problem is, are you aligned with the government? And you can't, because the government is, in terms of its rational expectations, is always, in every country, even maybe in this room, very busy at winning the next election. And if you have to define regulations, if you have to define tariffs, for instance, electricity tariff, it's all over the world, a conflict of interest of the government in between its interest or the social interest and something which would create a good environment, healthy and profit-oriented for the operators. So you have a conflict of interest. And in terms of time horizon, the problem is that if you succeed, if you are re-elected and so on, your horizon is not very much more than 5 to 10 years, not 20 or 30. And as Africa becomes more and more democratic, we have more and more changes, and each government feels that the previous government was really a very poor government. And it's very difficult to have, in terms of continuity, the state signature being respected. So you have not an alignment of interest with state-owned bodies or the public authorities themselves, with a few exceptions in Africa. So what I would say is that we have to work on that. And the magics of working with DFIs is that any government, when a project has been financed by the private sector, by the banks, when the liquidity has been captured on the world market, if a DFI is in the shareholders group, there is no government in Africa which is able to confront and be aggressively acting against any DFI. So that's one of the magics of the system. And it's not only the DFIs. Maybe you could ask yourselves, why is it that China is financing so many infrastructures in Africa? Because you have not only the Western world, you have a competition today. When you make any highway, harbor, airport, dam, whatsoever, where you have Chinese financing, Chinese propositions. One of the reasons, it's not that cheap. It's not that you are given that as a grant, as a gift. It is that you cannot be in any hostile position against China for the coming 30 years. So you have to, I think, consider that if you want to align the long-term interests of governments, public bodies, you have to have a third party in the coalition, a party that you cannot become at any time in the coming generation. You cannot be their enemy whatsoever. And it is the case of the World Bank, of the African Development Bank, of the Islamic Development Bank, but it's also the case with the People's Republic of China. And in a sense, it's also, for more social infrastructures, the case with the Bill and Melinda Gates Foundation. You have parties and coalitions are needed that you absolutely cannot oppose, and that for the coming 30 years. And I think this magic combination will be a substitute to the 5-year, 2-year, 3-year horizon of any government across the world, and especially in a democratic Africa. So that's why I think we are finding solutions to make sure that long-term projects be viable and reliable projects going forward.
Thank you very much. You were mentioning that this question should be also raised here in that room, but it's exactly one of the messages that Minister Bruno Le Maire also made in his opening speech when he was talking about the necessity to invest for the general interest and not only for particular issues, including on the local level. So this is the way this day is concluded. We've reminded the introduction. I'll now let the floor to my friend Philippe Pontet, who will conclude this day. Thank you, Philippe.
It's clear for me to speak after my friend Lionel, because he's my chairman at the board of the Quai Branly Museum, so he's the last speaker. Well, ladies and gentlemen, dear friends from some of you, as you can imagine, it's not exactly comfortable to be the last speaker when everything has been excellently said during this very busy and interesting afternoon by outstanding speakers and highly professional speakers. So forgive me not to be original and perhaps to be a bit redundant. But to be brief, I will try to stick to the essential. As chairman of our investment bank, it's of course a great honor for me and for HSBC to deliver this closing speech. And I do it also on behalf of my friend Jean Bernardo, our country head in France, who chaired and animated the EUROPLACE Working Party on Infrastructure Financing, which presented its report and conclusions at the beginning of the year. And this report was somehow created the backdrop of the meetings we have had this afternoon and of the other events which will be taking place along this whole Infra Week. If we give a quick look back to this report, we see that three main findings were about. First, the size, the diversity, both on sectors and geographies, of the global public infrastructure market, but also, it has been underlined several times, its extraordinary complexity. Second, the excellence, and I think that this word is not too strong. I'm not blowing our own trumpet. The excellence of all the industrial and financial members and partners of the Paris Place in this field, most of them being in this room today. And these partners form an impressive sum of talent, skills, financial strengths, but we must not hide behind our finger. We are now challenged by both our traditional competitors from the industrial world, but also by dynamic new entrants from emerging markets. And of course, Lionel just evocated the Chinese, were big bang in main China, and of course, they are extraordinary competitors with a firepower which is very, very, very impressive. Third point, the necessity to work, it has been said also, collectively between all the public and private entities of the Paris Place, in particular, the European and French public policymakers, the industrial companies, and the financial institutions, to mobilize ourselves and coordinate our actions. And this conference today and the following days will be an important milestone in this process. What we have seen today confirms, updates, and complements these findings. As we all know, the overall traditional infrastructure market is huge, but it is now being at the same time increased and deeply modified by the necessity to contain global warming. We see now a growing convergence between climate finance and infrastructure finance, and this is why we, HSBC, have organized during this Infra Week, it will be next Thursday, a special working party on the theme. Beyond the assessment presented this morning, earlier in the afternoon, by McKinsey, by the McKinsey report, Bridging the Gap, we can also quote that the estimate made by the OCDE, according to which $1 trillion of US dollar will have to be spent every year, each year, globally in infrastructure if we are to meet the commitments, and it will be the minimum, if we are to meet the commitments made during the COP21. And it's extremely good news to know that an international conference will be held in December in Paris. Arnaud evoked it. Will be held in December in Paris to progress in the implementation of these goals. By the way, I was a bit amazed that we could be suffering a lack of projects. We have no project enough, I heard twice. So let's promote the projects. Another point is that the size of the market fully confirms the need to deploy what is called blended finance, evocated at many times this afternoon. A combination of public and private funds to fund projects, of which the Juncker Plan provides an excellent example. We know that whilst public funds by themselves cannot meet, Bruno Le Maire said that this morning, we know that whilst public funds by themselves cannot meet the huge amount of financings to be raised, public funds have a key role to play to de-risking projects. And if they do so, or don't do so, but if they do so, the immense liquidity generated by international savings and boosted by the quantitative easing that will last, policies will be ready to flow in massively into projects offering an acceptable risk-return profile, of course. Then, structuring projects to make them bankable is not only about combining public and private financial tools, but it also requires a strategic dialogue with the country where the projects are to be implemented to make sure that the policy and legal framework, as well as the necessary skills, are in place, as well as the necessary skills. And it's comforting to know that the European and French policymakers, as well as the multilateral and national development banks also present in this room today, are active in this field. To conclude, beyond the progress we made these recent years, the task we still have in front of us, and all of us in our respective roles and responsibilities, is huge and complex. But at the same time, it is fascinating and rewarding that it provides a historical opportunity to do large-scale business while contributing to fostering sustainable development and mitigating the global warming. In front of this challenge, we have all reasons to be optimistic, both in our collective capacity to meet the challenge and in the ability of the Paris financial place to play a key part in this global game, as in Paris we see and welcome a great cooperation between European and French policymakers to fine-tune the regulatory and tax environment and complement the toolbox we need with financial instruments. We already have, it has been said, very powerful amongst the leaders in the world. We have very powerful and skilled financial institutions, banks, institutional investors, and we are ready to welcome new colleagues and partners. We are open, and we also have at close range global industrial players, they spoke today, in this area of public infrastructure and related services with whom we are used to cooperate. It's important to know the guys we are cooperating with. Overall, Paris has everything it takes to accommodate quantitatively and qualitatively a significant part of the investment needs requested to support a sustainable and climate-friendly economic and social development, and this will add to the already high degree of attractiveness of the Paris place, as Bruno Le Maire underlined earlier this afternoon. In conclusion, I would like to thank the French Treasury for organizing this event with EUROPLACE and for welcoming us in this famous place of Bercy. And I would also like to thank you for your presence, your contribution, and your attention throughout this conference. Dear friends, after almost 10 years of difficult, very difficult economic environment, we are not entering the paradise, but we obviously are entering a sweeter and smoother economic environment. At the same stage, at the same almost pace, and is not that quite frequent in the economic history of the world, we have a reasonable rate of growth, a reasonable great rate of growth is back at the same time in Europe, in US, and in the emerging market. Have a look back in the history. It is not that frequent. We also meet interest rates so low, and it will last beyond the normalization, which will happen, of course, but they will stay low. The volatility is low. The liquidity is huge. The financial markets, debt capital markets, equity capital markets, the balance sheets of the big banks are not only at disposal, they are at work. So the financial markets have not been so friendly for such a long time. Of course, we always can meet some geopolitical issues which could spoil, disturb this environment, but this environment is already very, very supportive. So it's time to move. It's time to go ahead. It's time to invest. And my last word, I would like to say it in French. Et je voudrais le dire en français parce que je voudrais faire un clin d'œil dans ce temple de la République française, où j'ai d'ailleurs sévi il y a bien longtemps. Le financement des infrastructures, it's a work in progress. Et ça progresse bien. Et ça veut dire que nous sommes en marche vers la bonne direction.